Hey everybody, welcome. We're going to go through the chapter 9 walkthrough. I know you're probably used to these walkthroughs by now, and hopefully it's still useful to you that I do these videos. Otherwise, I'm wasting my time. And maybe yours if you're watching it, but it's not helping you. Anyway, so here I am in my company file. In the textbook, it tells us I'm at after the overview, then we're on the trial balance page. So again, we're just supposed to check our trial balance, make sure that we're on track, right? So that we have the same numbers before we launch into this new chapter. I hope we do, since we checked it at the end of the previous chapter, and sure enough, my totals match. And then when I look at each account, they also match up. So that means I'm in good shape. Again, if yours aren't, it doesn't matter that much, because what we're trying to do really is just practice doing the steps in here. And it matters much more in your case file, your case 01, that where we're actually grading, and those you'll get feedback from me. If it bugs you that it's off, I'm willing to help you get it back straight if you want to. Anyway, so I'm going to move to the next page in the book. And so this whole chapter is on adjusting entries, where we're actually making journal entries. You may want to go back if you still feel uncomfortable with journal entries and debits and credits to the accounting review. Um, anyway, because we're going to be doing those type of journal entries in this chapter. So here I am in the book. It says adjusting entries, prepaid expense. Remember that a prepaid expense is just what it sounds like when we pay money in advance for an expense. The most common in real life is like insurance. Sometimes we prepay for rent, and then also like we'll buy assets like supplies that we'll use up as time goes forward. Those are all similar to these prepaid expense journal entries. So I'm on that page. It says to record an adjusting entry for supplies in the Wild Water Sports Company, do the following. Step 1, continue from where you left off. Step 2, click on the new icon and click journal entry. So you'll see journal entry over here under other. It'll bring up a journal entry form. Step 3 is type the date 1/31, 2000 or 27. So 1/31/27. Accept 6. It says accept. It just means leave it as 6. And then we're going to type supplies asset. Oops. So we don't have something called supplies asset. So we're going to hit add new. We're going to select other current assets for the account type. We're going to select what does it want? Other current assets in the detail type. We're going to leave the name supplies assets, not do anything else with that. So we're going to hit save and close. That's step 7. And then we're going to debit this account $500. So this means we're increasing the supplies asset by 500. And now we're also, it's going to have us do vehicle gas and fuel. And we're going to credit that 500, which it already assumes we're going to do. And so we've created a journal entry here, right? And what we're saying is increase our asset supplies and decrease our vehicle expenses. That's an interesting one. Let's see what they're curious what they're doing here. So it says we've recorded $500 of vehicle gas and fuel as an expense, but they should have been deferred as a supplies asset until consumed in some future period. So it looks like we bought $500 worth of fuel, but it's not going to be used until the future. Okay, so they're having us create this supplies asset, increase it by 500, and then we're decreasing the expense by 500. That's what they're having us do there. And in order to know what's going on, you'd have to know that expenses are increased with a debit and decreased with a credit. Assets are increased with a debit, decreased with a credit. So all that stuff you learned in accounting class. All right. So we're going to hit save and close. And that was step 11. So now we'll go down uh, to the next section to record an adjusting journal entry to record the expiration of prepaid expenses. So in this one, what we're going to do is we have prepaid expenses, means when we've paid in advance for something. In this case, it looks like insurance. And if you remember in the past, we already had, like on our report for our trial balance, we had a balance in the prepaid expenses insurance account. And so that, oh, I still have it up so we can actually look, right? Um, so if we look in here in the assets, we'll see prepaid expenses of $17,500. So what we're saying now is we're getting to the end of the month and 1,000 of that is being used because we have insurance coverage. So we're doing a journal entry to record that. So step 1 is continue where you left off. Step 2, new journal entry. We have 1/31/2027, journal entry number 7. And we get down here and we're going to do insurance, which you can see is an expense account. So that's step 3. Or sorry, step 4. We're going to debit that insurance expense $1,000. That means we're incurring an expense of $1,000 for having had the insurance coverage. And then we'll do prepaid expenses. Oops, if I could type correctly. Prepaid expenses is our credit. It assumes 1,000. So there's our journal entry. We're increasing the insurance expense and decreasing the prepaid expenses asset. And then we'll hit save and close. And you can see like now in our prepaid expense account shows 16,500. And we can see our insurance expense has $1,000 on it. So we did it right. So that was step 9 to take a look at the journal entry and see how it impacted that. Step 10 is to click the supplies asset, $500. So we're going to look at supplies asset. It's showing us the classic view right now. You can see the transaction report. Again, they're always doing this where they just kind of show us how we can look at this and see that it came from a journal entry, not from a check or something. Step 11, click back to report summary, sorry. We're going to click the 16.5 in prepaid expenses. And now we can see that we have where that came from, that we had 15,000 opening balance. We added 2,500, and then we just used 1,000 of that prepaid expense. All right. So I'm going to go on to the next page in the book. This is adjusting journal entries for accrued expenses. And we're going to record, looks like a $2,500 bill that we received let's see, received and recorded in the next month for advertising consumed in the current month. Thus, an adjusting journal entry needs to be made to accrue this expense. So we're at step 1, continue from where you left off. Step 2, create a new journal entry. Step 3, we have the date, 1/31/27, and a number of 8. We're going to select advertising and marketing. There it is. It's an expense. We're going to debit 2,500. That means we're increasing our advertising and marketing expense, 2,500. And then we're going to go to line 2 and type in accrued liabilities. Let me type it nice, ACCRED. We didn't have that in before, so we're going to add it. Account type is other, where are you at? Other current liabilities. And then we're going to call it other current liabilities. Its name will be accrued liabilities. We'll hit save and close. We have 2,500 there. That's step 10. And then before I close it, just let me explain what's happening here. This is so accrued liabilities means money we owe. So the way this works is if we used advertising and marketing during the month, during January, we need to recognize we've incurred the expense of it, but we won't have to pay for it until next month. So what we're recording here is that our expense went up, but we're not paying any cash. Instead, we're paying on a liability, which means we're promising to pay in the future. So our expense went up for advertising and marketing, and we now owe $2,500 for that we'll probably be paying in the next month. So step 11 is save and close. Step 12, we can look at our journal entry and see that we now have an accrued liability right here of $2,500. That's just, again, money we owe. So I'm going to go to the next page. All right, this one tells us further investigation of our trial balance indicates that the sale of a boat recorded on sales receipt 1001 for $55,145 had not been delivered, even though the cash had been received. Thus, the revenue had not been earned. So if somebody pays us and we haven't delivered the goods to them yet, then we haven't earned that revenue. And so we can't have that revenue showing up on our income statement as if we've earned it this month. So we're doing an adjusting entry to show that this money that was recorded as revenue at the time we did the sales, it has not yet been earned. Okay. So that's what we're doing here. So it tells us in step 1, continue from where you left off from the trial balance. You can click the sales amount of 164,000 right here under sales. And then we can see our sales receipt 1001 for 52,000. And you can see here we received it $55,145, which was a sale of 52,000 plus the tax of 3145. And so we have to recognize that this isn't actually revenue, right? But our system is set up to record it as sales revenue once we enter the sales receipt. So it tells us to go ahead and close out of this. So step 2, now we're going to enter a journal entry. The date should be good. The journal entry number is good. And now we are going to debit our sales account. And since sales is a revenue or an income account, we're going to be decreasing it by debiting it. Step 3, we'll put in 52,000. And we're going to put the name of our customer, Southtown Water Sports. Then we're going to put unearned revenues. It's not in there, so we're going to have to click add. That's step 7. Step 8, we're going to call it other current liabilities. And then the type is deferred revenue. That just means revenue that we are going to earn in the future. And since we already received the money, it's a liability, meaning we owe the people the boat or we owe them their money back. But we expect that we'll be delivering the boat to them soon. We'll leave the name as unearned revenues, hit save and close. So we've added that account. It assumes 52,000 on the credit side, which is correct. And then we're going to do Southtown Water Sports again. And then we'll hit save and close. So what we're doing here is decreasing our revenue and increasing a liability account called unearned revenues, meaning money we owe, or in this case, owe delivery of the boat to the customer. All right, I'm going to take a look at our trial balance again. We'll now see an unearned revenue of 52,000. Step 14 says to click on it, and we can see how that transaction changed that account. Step 15 is go back to the summary report, and that's the end of that section. So I'll move on in the book to the next page, adjusting journal entries, accruing revenue. Further investigation of this trial balance and period end business activities indicates that a Tige 25ZX boat was sold and delivered to a new customer, High Flyer Sports, on 1/31/27 on net 30 terms, but not invoiced until the next month. Sales tax on the sale amounted to $13,525, and the boat was sold for $225,000. Thus, you'll need to record an adjusting entry to accrue revenue and an accrued receivable. So step 1, continue from where we left off. Step 2, we're going to add a journal entry. We'll leave the date, should be 10, we'll leave that. And then we'll type accrued receivable. We'll add it new. Step 5, we're going to call it an other current asset. Step 6, the detail type will also be other current assets. We'll leave the name. Step 7, we'll hit save and close. Step 8, we're going to debit $238,525. We're going to type High Flyer Sports. We'll add them as new. And we're just going to save it. We don't have any other info on them right now. Over here, we're going to hit sales. We're going to do 225,000. That's step 11. Do High Flyer Sports. That's 12. Step 13. We're going to say sales tax to pay. And we'll do the 13,525 in there. We'll do High Flyer Sports again. And there's our journal entry. So let's take a look at what this journal entry is telling us. So we're saying this money that we've sold a boat to these people, but we hadn't yet entered it. Okay. So accrued receivable means they're going to pay us in the future. And then we're recording an increase to our revenue of 225,000 and an increase in the sales tax to pay account of 13,525. Let's save and close. We can see, for example, that we now have an accrued receivable. Where are you at? Accrued receivable should be up here in the assets. There it is. And that our sales increased and our sales tax to pay also increased. And again, we can click on them if we want. That's step 18 to reveal a transaction report, but I won't. Okay. Next page in the book is to record a depreciation adjustment. So let's see, further investigation of this trial balance and period end business activity indicates the company's fixed assets need to be depreciated for the month. Monthly depreciation for equipment and furniture is $1,000 and $250 respectively. Normally, the adjusting entry would debit depreciation expense and credit accumulated depreciation. However, the accounts set up in the chart of accounts need to be edited. Thus, you decide to change the account names first and then record the depreciation adjusting journal entry. So step 1, continue where you left off. Step 2, click the gear, and then we'll click chart of accounts. Okay, we're going to go to our furniture asset. Let's see. There it is. So it says click edit from the drop-down arrow next to the words view register under the furniture account. Oh, the depreciation line. Sorry. Oh, you know what? We never created it. So that's interesting. That was back when we had to create it as we were going. So we never even created an accumulated depreciation account. So this is going to be different from the book. If you already have it, then you'll go ahead and edit its name and we'll change it to accumulated depreciation. But I remember when I was doing this, so I'm going to create a new account called accumulated. Actually, watch, I'll call it depreciation. We're going to call this a fixed asset account, an accumulated depreciation account. It's going to not have a beginning balance. We're going to make it a sub account of the furniture account. I'll save it. So now, if I come down here to furniture, I'll have one called depreciation and one called original cost. And now I can go in and go edit. And then step 4 was to type accumulated in front of it. And we'll click save. So that was what would be step 4 in the book if you'd already had it. If you didn't already have it, you'd had to create it like I just did there. Step 5, we're going to scroll to the bottom of the chart of accounts and select edit from the drop-down. So I'm not sure what they're trying to get us to do. Yeah, I think that might be a little different here because that's not how it's set up anymore, right? If we go down here, there's not more. But we can come here. We can do a batch edit, just figuring out what they want us to do. Huh. Yeah, so think, yeah, that's a little confusing. So I think they just want us to go down and find depreciation expense, which honestly, there would have been a lot easier way to do that. So I'm going to go to my chart of accounts. If I just look here and do depreciation, it'll bring up the depreciation. You can see here is an other expense, and they're telling us to edit it and change the name of our depreciation account to depreciation expense. That's all they're trying to do there. Sorry, I got a little confused because I didn't feel like the instructions were super clear, but it could be my brain. I'll hit save. Now I have depreciation expense as the name of that rather than rather than just depreciation. All right, so now we're going to click a new journal entry, step 7. We should still have, there it goes, the same date. It should be journal entry 11. Then we're going to select depreciation expense. We're going to do 1250. In real life, we would either look up in the schedule to come up with that amount, or we would probably check with the accountant because they would have figured out how much we're going to be doing depreciation there. So that was step 10. And then we're going to do, so if I do equipment, you'll see I have two sub accounts, and I'm going to use the accumulated depreciation account. And for the equipment, we're going to do 1,000. And then for the furniture, we're going to do accumulated depreciation. And that'll be for 250. So now you'll see my journal entry is saying increase the depreciation expense by 1,250 and credit the accumulated depreciation on the equipment by 1,000 and the accumulated depreciation on the furniture by 250. We'll hit save and close. It's step 15. We'll run a report, make sure it matches everything. Trial balance. I feel like they're showing us a partial trial balance for some reason here in the book. Oh, yeah, it's a partial view. We can see that our depreciation for the equipment and the furniture has increased a little bit, and our depreciation expense has also debited or increased a little bit. And there we go. We should be good for the chapter. I hope that was helpful, and I hope it, as usual, helps you with the actual case assignment as well. So don't be afraid to reach out, and have a great week.